Good afternoon, everybody. Today is Wednesday, May 8th, 2013. Welcome to my video update. Three things I'll talk about today are the markets, the economy, and your accounts. First off, looking at the markets, all I can say is this is unbelievable. I'm really surprised, plus me, myself, and probably 99% of other active money managers are surprised at the gains we've had in the market this year, or the U.S. market, I should say. We're really not seeing gains anywhere else, but it's a sign of how accommodative the Fed is. If you look at other markets around the world, they're just not performing nearly as well as the U.S. because they're just not printing the money we are. How much longer is this going to go on? Well, we'll have to wait and see. I mean, nobody really knows how much longer this will matter, because at some point, it really, I do think the economic data will start to matter with the markets. And that brings me to my second point, the economy. The economy, it's growing a little bit, but it's not, it shouldn't be growing as much as we'd expect, or especially as much as we'd like, and that's why the Fed has been so accommodative. One thing I do say is things like the Purchasing Managers Index, which came out a couple weeks ago, was lousy news. The market shrugged it off. There was the bombings and the terrible event in Boston, and the markets shrugged it off. There's been a lot of stuff out there that the market has continued to shrug off. It won't shrug it off forever, which brings me to my third point, your accounts, and what are we doing about this? Looking at the accounts, well, the last couple months we have started to cash in our winnings, and like I say, and protecting our profits. We've started to do that in the last two and a half, 3 months, as the market has had a very quick ride. Obviously, if I could turn back the clock, I wouldn't have sold anything, because the market is going up. It just seems right now unstoppable. And but it can turn on a dime, which is why we're doing the correct thing in our with risk management principles, and making sure we are taking gains off the table, and making sure it's not always what you make, it's what you keep. A couple trades that we have made in the last week that you will see in your statements is we sold our utility fund. We did very well. We made about 11.5% over the last couple months in utilities, and we exchanged it for some Chinese stocks. We bought China at the end of last year, made a quick 12% in I think it was like 28 days or something, and we sold it. And since then, fortunately, after we sold it, it fell about 20%, and now looks like a pretty good low risk entry to get back in. Today we also made another trade. We bought commodities, and the only commodity we didn't buy general commodities. We just bought the ag space, and things like livestock and agriculture. Didn't buy any gold or didn't buy any oil. I mean, if Mideast tensions, I don't want anything to do with oil right now, because if tensions don't flare up, I don't know where oil is going to go. And if they do flare up, yeah, it could go up, and we might miss that. But it looks like there's a lot more downside risk too. The next thing being gold. I don't know where gold's going to go. I don't know how high it's going to go or low, and I don't see any basis for buying it. That's why we're just sticking with this segment of the commodities. And I also like them because it is summertime. If there are droughts or if there are floods, that will really affect commodity prices, and we will profit from it. With that being said, I just want to thank everybody for tuning in. Please call me if you have any questions. Like always, thank you for being my client. And to the moms out there, have a wonderful Mother's Day. Bye-bye.